One of the most successful entrepreneurs in America over the past 50 years is going public with his fourth and final prediction about a scenario he calls America's Nightmare Winter. You've probably never heard of Bill Bonner, but in addition to owning an interest in businesses all over the globe, he also owns more than 100,000 acres with massive properties in South America, Central America, the US, plus 3 large properties in Europe. Bonner says, we're about to enter a very strange period in America, which could result in the most difficult times we've seen in many, many years. Bonner has made 3 similar predictions in his 50-plus year career, and each one proved to be exactly right, although he was mocked each and every time. That is why I strongly encourage you to read about Bonner's fourth and final prediction, totally free today. It's all spelled out in a free report we've put together about America's Nightmare Winter scenario. Get the facts for yourself. Go to AmericanWarning2022.com to get your free copy of this report. Even if he's only partially right, it will dramatically affect you and your money. So again, www.AmericanWarning2022.com. Matt Hougan's joining us right now from Bitwise. Matt, how you doing, buddy?
I'm doing great. It's good to see you, Matt. Good to be on the pod.
Yeah, good to see you. For those who don't know, I probably met Matt well over a decade ago. I mean, it's been a long time now since I met Matt. And watching his career take off to where it is has been really fascinating. So congratulations on everything you've achieved, everything more that you will achieve going forward. But I guess I call it one of your latest ventures, Matt, has been into the crypto space over the last couple of years through Bitwise. Why don't you just give me kind of like, the 50,000 view of where we are with cryptos and blockchain right now since the last time we talked was probably about a year and a half ago.
Yeah, it's been quite a year and a half, Matt, right? We had the huge bull run up until November of last year, and then about a 60-70% pullback between November and June. You had all the people, as they do each time, whistling that it was over, that crypto was dead, that it was going to go away. And now we've seen a nice little recovery. I think I've taken away 2 lessons from this stretch in time. One, crypto isn't going away. We work primarily with institutional investors, and institutional investor interest never diminished over that pullback. They're looking at these lower prices as an interesting entry point, not as an issue with crypto. And the other thing is crypto is sort of, I think, on the cusp of going mainstream. If you think about the last boom in crypto, it was about the rise of NFTs. It was about the rise of DeFi. It was about the rise of stable coins. And those got to be pretty big. I think we're now in a quiet building period. I think the next wave is going to be even bigger. We're going to have 10, 20 versions of NFTs, DeFi, stable coins, 10 or 20 new areas of the market that crypto opens up that get to be substantially big. So I think the next wave is bigger than the last, and we're in sort of the pause that refreshes right now.
Yeah, and you mentioned we're in pause there, and kind of leads me to my next question. People always seem to allude to cryptos, Bitcoin in particular, as extremely volatile. But if you look at the action over the last couple of months, Bitcoin's actually been in a pretty narrow trading range, kind of between 20,000, 24 and change-ish. Just this past weekend, I thought we were going to break out. It looked like we were going to blow through 25 and make that run. Obviously, we didn't do that yet. But to me, that's a very positive thing. In the volatility we've seen in the equity markets, in bond markets as well, and to see really crypto and the big one, between the big 2, let's say Bitcoin and Ethereum, really kind of consolidating volatility coming down. Do you see this as a positive, number one? Number 2, are we starting to see that correlation between Bitcoin and the tech stocks lessen? Because I know it got really close to almost being one during the pullback in the market. Do you see that was kind of decoupling again?
Yeah, I absolutely do. So first, yes, it's a very good thing that we found stability, that we're trading sideways. We tend to go up more than the equity markets on up days, down less on down days. Those are always good signs. But the point you make about correlations is the really key one. Look, what happened from November of last year to January or so was that the Fed was the only thing that mattered, right? We had this big turn from years of quantitative easing to quantitative tightening, and nothing mattered in the market. Tesla wasn't trading based on how many cars it was selling. It was trading based on what Jerome Powell was selling. And that was true of all risk assets, and crypto is a risk asset. But now that the Fed is sort of baked in, we know broadly the path that they're going unless there's unexpected data. You're seeing the fundamental drivers of different assets take over. And the fundamental drivers of crypto are just different than the fundamental drivers of stocks, right? It's technology progress, it's regulatory progress. Stocks are driven by gross economic activity, tax policy, et cetera. And so you're seeing them decouple. And we've seen this before, Matt. You've lived through enough crypto booms and busts to remember that during the COVID crisis in March, correlations went to 1. During the mini taper tantrum in 2018, correlations went to 1. But guess what? If you're a long-term investor and not a short-term trader, you benefited from those low correlations over time. And we're seeing the same thing happen here. And it's going to intensify in the months to come. I don't see this trend going the other way.
Yeah, that's a great point. I feel like in times of panic, you will see it go to 1 because you just basically have people flushing out anything they perceive risky out of their portfolio. So they're just selling all at once, And you and I have been around this business a long time that we know when the masses are panicking, it's probably a great opportunity to do some buying, which we've seen many times over the years. So as hard as it is to do that. And you talked earlier about how we had the DeFi, NFTs, stable coins, and we're going to see like kind of the next iteration of that potentially, or more subcategories come out within the industry. I look at this a lot of times, and you see thousands of coins. You probably know the exact number, but there's thousands of different coins or tokens out there. Between now and let's say the end of the decade, looking out the next 8 years, do you see that number shrinking dramatically and really kind of coming to a few core, or do you see that kind of staying that big?
Yeah. Can I say both? I know that's not a direct answer. Look, I think the only ones that will matter are the top 5, 10, 15, maybe 20. But this is a little bit like the software space, right? There are 20 large SaaS companies that matter. There's Microsoft, there's Oracle, there's Salesforce, there's Snowflake. And then there are 100,000 startups that are all trying to be the next Microsoft, Oracle, Salesforce, or Snowflake. The same thing will be true in crypto. Remember, crypto aren't just currencies. Underneath each currency, there is a piece of technology called a blockchain. And those blockchains can be optimized in different ways. So in a mature state, just like in the software space, I think there are probably a handful that matter, maybe a few dozen, and then a bunch of startups that are trying to chip away. And every once in a while, Matt, one of those will find its way in, and it'll be a spectacular return. Most of them will fail, just like the traditional sort of startup world in the software space. I think it's almost exactly the same.
I love that you compared that to software, because I try to explain to people, especially being down in Nicaragua, a lot of people like to think outside the box, outside of government stuff. So they think about cryptos in a way that they have an open mind. But trying to explain sometimes like what blockchain is and what's really going on in the industry, I tend to use software as a bit of an analogy. To me, it's kind of like the next iteration of software. The 90s was software, 2000s, I should say 2009, 90s, late 90s, early 2000s. Software companies were basically, they changed the world. Think about doing a math problem without Excel. I mean, that's crazy.
Right.
Like, how did you do that back then? I see, the blockchain and cryptos in very similar vein, Matt, where this is really the next, like I said, iteration of software that's going to change the world that all businesses will be built on. Eliminating middleman, just taking things to the next level, transparency, quickness, cheap. Is that kind of a good way to explain people really what the blockchain is doing in the next 10 years?
Yeah, that's exactly right, Matt. I love to tell people that, I think crypto is probably the most important technological innovation that I've seen in the last 30 years. And I'm not sure if I'll ever buy a cup of coffee here in the US with Bitcoin. People think of crypto as currency. That's just a piece of what it can do. It's really a technology that you can build a new generation of the internet on, right? A Web3 of the internet. It's an internet where you as an individual can own your data. You as an individual can own property, where different sites can let you move between them freely. And I think it's going to be, as big or bigger as what they call Web 2, which was the rise of social media sites like Facebook and Google. It is the right way to think of it. Think of it as a technology and not as a currency, or not just as a currency. And you could start to see, why there's so much venture capital in this space, why there's so much talent in this space, why virtually every firm is hiring blockchain engineers. It's because it is this new fundamental technology on which we can build a new and hopefully better internet.
It's amazing, Matt, because I'm here in the States, wherever I am, you surround yourself with some very smart people from time to time, and you always have these very smart people like Bitcoin's a scam, blockchain doesn't exist, like all this stuff, and it's there's still a lot of pushback, which I love because I feel that it creates or still has the meaning that there's still a lot of opportunity out there because there's a lot of money that is not really bought into this yet. And you talked about institutional money, and you see different stats come out from you guys, Bitwise, and from ARK Investments, saying just how small the amount of institutional money that is in blockchain and cryptos now. Do you have any idea what that number kind of is and where that number can go, and what kind of effect that will have on demand for that market in the next 10 years or so?
Yeah, I mean, the short answer is it's vanishingly small. I think there are probably a handful of pensions that have direct exposure to Bitcoin, Ethereum, or other liquid crypto assets. They may own venture capital plays in the crypto space, but they don't have direct exposure. We deal with the financial advisor market. I can tell you that the percentage of financial advisors that are investing in crypto is growing. It's something around 15 or 20% now, but most of them are only doing it for one client and only about 1% of their portfolio, right? It's very narrow and niche. Crypto has grown into this $2 trillion market on the backs of retail investors, but retail investors don't control most of the money, right? There is at least 3 or 4, 5, 6x more money in the institutional space. And it's all going to enter. They're all going to gain exposure to crypto over the next 5 years. It's just like the internet in the early days. People were hugely skeptical of internet stocks. They didn't think Facebook could ever make any money. But eventually, the institutional investors get the message and they come in. And of course, there's a fixed supply or a slowly inflating supply of crypto assets they can buy, of blockchains they can buy. And so more demand, the same supply, should all else equal rising prices. And I really do think it's a wave that's building right now. We see increased interest from institutions month over month and week over week at Bitwise.
Yeah, and the institutions, in my opinion, and you probably agree with me, they have to consider this because they're going to have clients and big clients that want to have exposure. And if they don't offer that, they will go to another advisor, another hedge fund. And we all know if you're in that business, you're about assets. You need to keep those assets and gather those assets. So if you don't offer it, it's like saying I want a cheeseburger, but you're not serving it. Well, I'm going to go somewhere else to get my cheeseburger. You have to be able to offer this. And I love seeing that. And I will tell you, Matt, when I sold my RIA last October, in the year and a half, 2.5 years before that, business really exploded because the market was doing good. But the percentage of people when they'd call for just an exploratory call to ask about the business, I would say this is no exaggeration, 8 out of 10 asked if I could buy them cryptocurrencies at some way. I didn't at the time. I could help them with it, but it was really amazing how many people asked. I mean, it was like, and some of them probably shouldn't have had exposure. 85 years old, living off income, you probably shouldn't have a big exposure to Bitcoin, but they asked, and that just shows the demand for it out there from retail and from institutions are moving there as well. You say all the big names moving in there. So speaking of the big names, obviously Bitcoin's the leader. Then we have Ethereum, and we have a big change coming up in Ethereum, and it's kind of been in the headlines here a lot. And the first test went well. And I know you guys have a fund that tracks that. What are your views on kind of the big two right now, both Bitcoin and Ethereum? Do you prefer one over the other, or is it more of a diversification play, a little bit of each?
Yeah, I love all my children equally, so I think people should diversify between the two. But I will say I think Ethereum is the most important blockchain in the world right now. It's the one with the most attention on it. It might help, Matt, just to pause for a second to explain the difference between Bitcoin and Ethereum. The underlying blockchains are very different. The Bitcoin blockchain is a very limited piece of software. All it can do is sort of hold or store wealth. The Ethereum blockchain is what's called Turing complete, which means you can program it to do anything. If you want to build a new version of the New York Stock Exchange, you can program that on Ethereum. If you want to sell concert tickets directly to fans instead of through Ticketmaster, you can do that through Ethereum. And so all of the interesting venture capital activity is happening around the Ethereum blockchain, and most of the interesting development is in that space. I think it's probably going to be the most important blockchain over the next 5 years. You mentioned something really interesting, which is going through this technological upgrade, which in crypto land is called the merge, which is changing out the core piece of machinery that lets it settle transactions and secure the network from something called proof of work to proof of stake. You don't need to know those terms, but you do need to know that it'll do three things for Ethereum. One, it'll cut its carbon footprint by 99%. There is this critique of crypto that it consumes a lot of energy. And just like we're moving from gas-powered cars to electric cars, crypto is moving from energy-intensive ways of producing this blockchain technology to carbon neutral approaches. And Ethereum is making this switch. This will bring more institutions into the space. The other thing it's doing is it's reducing the amount of Ethereum that's created every year by about 75%. And, again, simple supply and demand, there's going to be less supply of Ethereum in the market after the merge, which takes place around September 15th, than there was in the past. That should be good for supplies or for prices. And then the third thing, if you're a long-term investor in Ethereum, after this transition, you can stake your Ethereum, which is sort of lock it up for a period of time and vouch that you'll be a good actor. And you can actually earn a yield on that position. The yield will be somewhere in the 5 to 10% range. And that's going to be, I think, transformative. How many venture capital style investments can you make that have huge appreciation potential, but also have a 5 or 10% yield? It's really a rare combination, and you're getting all three of these changes at once. It's coming in September. I think it's the biggest news in crypto this year.
Yeah, I do too, and thank you for explaining that in a way that I can understand and most people can understand. Because the one problem with this industry is it's extremely confusing. I mean, you think about the stock market, how many smart people I meet, doctors, lawyers, you name it, and they don't understand the stock market, let alone try to explain crypto to them. It's like truly, really a foreign language. So thank you for explaining that in a way that truly was digestible, which is great. So looking at all this, to me, Ethereum, this change is huge.
Yeah, I think you're going to see general interest in Ethereum like blockchain. So this will focus that attention. The two that I think are the most interesting, you mentioned Solana. That's definitely one of them. And Cosmos, which the ticker for its crypto asset is Atom, ATOM, is another really exciting blockchain that a lot of people are focused on right now. Let me make another analogy. Like you have Salesforce and Salesforce competitors, you have Ethereum and Ethereum competitors, and they're all different in other ways. Solana is cheaper to use than Ethereum, but less secure. Cosmos uses a different internet architecture to make it function. I think if you're a smart investor that's making a bet on crypto, you want exposure to at least those three. If you're playing in the Ethereum space, don't just bet it all on Ethereum. I'm hugely bullish on Ethereum. I think it will be the most important blockchain for the next 5 years, but I'm not 100% certain that will be true, Matt. Something could go wrong in this technological upgrade. People might not like the way it works in the future. Another blockchain could develop faster. You don't put all your eggs in one basket, right? So diversify a little, add some Solana, add some Cosmos, maybe add Cardano and other competitors. I think that's the best approach to this space, is just to buy the field.
So let me ask you this, Matt. Do you, at Bitwise, obviously you have several funds that are publicly traded that people can buy that track different cryptos. Is there one that tracks, kind of the Ethereum type, or is there one that's where it's more of an index that's concentrated on Bitcoin, Ethereum? What options do investors have now?
Yeah, absolutely. So our flagship fund is the world's largest crypto index fund. It's called the Bitwise 10, which holds the 10 largest assets weighted by market cap. You can think of it like the S&P 500 of crypto, and that has a lot of Bitcoin and a lot of Ethereum in it. Just like you would use the S&P 500 or SPY in your portfolio as sort of an anchor, and then maybe experiment around it, you can use the Bitwise 10 as that anchor and experiment around it. We do have an Ethereum fund, but it's not publicly traded. It's only available for private clients. So the Bitwise 10 fund is publicly traded under a ticker BITW. It can trade at premiums and discounts just like a closed-end fund, but you can access it in brokerage accounts. It gives you that broad-based exposure.
So where do you know where it's trading at now? Is it trading at a discount now versus its NAV?
Yeah, it's currently trading at a discount. All of these, they're called OTCQX securities. GBTC is the best known, but ours, BITW, is another one. All of them are trading at discounts. They've historically, some of them have traded at premiums, are traded at a big premium at one point, but it is trading at a discount today. Some people look at that and they're excited. You're buying, $1 of crypto exposure for 80 cents or whatever the discount is. Some people look at it and worry that it could trade to a wider discount. So every investor has to make their own decision. We don't control that discount at Bitwise. It could go up, it could go down, it could go sideways. But it's just a feature of the regulatory environment we're in that these are the products that we can offer in public tickers.
So speaking of regulatory environment, I'm sure you hear this question probably 10 times a day from people in the industry. When the heck is the SEC going to allow a true spot Bitcoin ETF?
I love Rick Edelman gives a good answer to this that I'll steal. He says, I think it's 12 to 18 months away, and I've been saying that for 6 years, which I think is right. I have no idea. Bitwise has made 2 applications to the SEC. We've submitted literally hundreds of pages of academic research in support of them, and both of those applications have been rejected. At this point, I don't have a clear view on when it will happen. I think it will happen eventually, but there's no sign that eventually is right around the corner. And it's worth noting, Matt, we're falling behind in the US on this. There are Bitcoin ETFs in Canada, in Germany, in Scandinavia, in Brazil, the US, in Australia. The US is falling behind its peers and giving people safe, low-cost, secure exposure to Bitcoin in an ETF structure. I think it's really unfortunate. But they haven't made me the head of the SEC, so I don't get to greenlight it myself.
Not yet, Matt. Not yet. The other thing, I just blows my mind that they approve the Bitcoin futures ETF, but not a spot one. And their job is supposed to look after the individual investor. And I think if you were to regulate it and have a spot ETF, which, folks, what that means is you buy an ETF that tracks the actual spot price, which is the price of Bitcoin 24/7. So instead of having to go through, let's say, Coinbase or somewhere else, you can actually just buy it through your brokerage firm and do it in your IRA or just your regular account. So make it very easy, very cost effective, I believe, for most people to do that. So to me, they're doing a disservice, Matt, and I don't want you to say anything bad about the SEC because I want you to get approved, but let me say something bad. I think they're truly doing a disservice, though, for the individual investor by not giving them this safer, more transparent way of investing in such a large asset class.
I couldn't agree more. And look, people are doing it already, right? There are 100 million Coinbase accounts. People are buying it through PayPal. They're buying it in these OTCQX structures. So I think all a Bitcoin ETF would do is make it more secure, lower the cost, and make it easier for people to do something they're already going to do. I agree with you. I think it's past time. I think it would be good for American investors if we had a Bitcoin ETF today.
So before I let you go, I have 2 questions for you. One, and you don't have to answer either one, but first one is, do you have a target, or does Bitwise have a target, like a long-term target for Bitcoin, looking out over the years? I don't care from year to year what happens, but do you have a big target on Bitcoin?
Yeah, I will say this. I think it's perfectly rational to believe that Bitcoin could trade to $500,000 over time. The way I picked that number out of the hat is if Bitcoin held as much wealth as is held in gold, it would be about $500,000 at Bitcoin. And, I love gold, but I think Bitcoin is better at being gold than gold is on many metrics, not all metrics, but many metrics. And if you think out 5 or 10 years, could Bitcoin be as big a store of wealth as gold? I think the answer is yes. And that leads to $500,000 Bitcoin. Will we get there? I don't know, but I think that's certainly within the realm of possibility.
As you know, gold bugs do not like to be told that gold's not the greatest investment in the world, and it has. The number I keep pulling out is you go back to May of 2020 when inflation was 0.12%, it went up to 9.5%. And in that time frame, gold should be a great performer, right? We've had wars, we've had inflation, we've had craziness going on, and in that time frame, gold is actually flat, where the S&P's up and Bitcoin's up huge. So tell me what I'm missing with gold. Like, I truly think Bitcoin is the new digital gold.
It is the new digital gold, man. It's better than gold at everything gold tries to do. You can move it faster. It's harder to fake. It's easier to store. It's harder to falsify. It is the new gold. Look, there was one good time to own gold in recent modern history, and that was right after we went off the gold standard. And the world was figuring out, what role does gold have to play in the world? And so it repriced into its current level. And since then, it's basically been holding serve. It's basically been flat, maybe 1% a year since 1980. Bitcoin is going through that same process right now. The world is figuring out, what is this new thing? Is it a new way to store wealth? And if I'm right that people are going to think of it long-term as a legitimate way to store wealth, it's going through that same appreciation phase. This is when you want to own stores of value, is when the world is figuring out that they're valuable, when they're emerging stores of value. And that's where Bitcoin is. That's why it's been the best performing asset in the world over the last 10 years. And I think it has huge potential in the future because still very few people own it. So yeah, I tried to say a nice thing about gold because you're right, the gold bugs come after you. But I haven't owned gold in my portfolio in a very long time. And I think betting on a digital future is generally a smart bet. It's been the best bet investors can make over the last 30 years across multiple different categories. And I don't see that trend reversing. And Bitcoin is just digital gold. We're becoming a more digital world. Of course, it's going to be part of the mix in the future. And it'll be exciting to watch. And I'm definitely coming down to stay with you in a few years. I'm going to take you.
Absolutely. So one last question I ask all my guests, and again, you don't have to answer it, but I always say, if you're stuck on an island, a beautiful island with your family for the next 10 years, you can't look at the internet, you can't change your investments, you can't look at prices. What's the one investment you want to have for the next 10 years, Matt?
Ethereum for sure. I think it is going to be the foundational layer on which a new and more interesting version of the internet is built. I think it's got massive asymmetric returns, and I'd be happy to stay on a desert island for 10 years with the fam, and then come back and see where my ETH price is. I feel pretty comfortable with that.
It's not a bad time in the world to kind of get away for 10 years, is it? I feel like it'd be kind of nice to get to an island right now.
That's right. I'm going to come down and visit and see what it's like.
Exactly. Well, hey, Matt, listen, thank you so much again for joining us. We'll bring you back, obviously, from time to time.
Thanks for having me, Matt. This was a delight.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.